Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Thursday morning. We're taking a look at the aftermath of three kind of important stocks. We had earnings from Meta, from Tesla, and from Microsoft. And if you know anything about the way that I like to trade earnings, yesterday wasn't the day in any way that I was looking at these three stocks. In fact, the best time if you are a swing trader. The best time if you're a trader who's willing to take positions overnight is to find those symbols that are about 6 to 4 weeks from earnings. And then what you want to do is focus on those that have the highest probability of following through, or what's called the rally into earnings or the ramp up into earnings. And that's going to oftentimes be where the implied volatility is lower for those of you that like to buy options like myself. It's going to be where the follow through is going to be in that anticipatory mode, not in that hyper reaction mode of the actual earnings coming out. And the risk reward is going to be far superior to dealing with the melee, the chaos oftentimes of the release. Now, I'm not going to in any way deny that it's very exciting to have a position on when earnings are coming out, but I'm not trading for excitement. I can go bungee jumping for that, right? I'm not going to reduce my trading into this binary, am I really right or really wrong, bet with high implied volatility. So it's just a different school of thought. Nonetheless, all three of these stocks are heavily weighted in the obviously the NASDAQ, but they have implications far further than that. For Microsoft, it's the NASDAQ. QQQ, of course, XLK for Tesla, consumer discretionary. We know there's a lot of different funds that have Tesla in their holdings. We know S&P and NASDAQ also are high concentration weighted with Tesla. And you get to Meta. Well, that's communications. That's also the NASDAQ. That's also the S&P. So it's really tough to get away from their impact, even if you don't want to trade the event. So that's where we respect what the event could bring in terms of volatility. And for me, it's really a process of, frankly, avoiding risk and looking at what would it cost me if I'm wrong, as opposed to the hopium, right, of what can I make if I'm right. So that is where we sit as we start off the morning. And really where all this is going to land is two places. One is the NASDAQ. Where are we right now in the NAS? And by the way, if you've been following Charts and Coffee or any of the analysis that I've been doing over at the Simpler Trading YouTube channel or my YouTube channel at Raghee Horner, I'm bullish. I'm not as, we're not in that mode of expecting rate cuts. So I'm not any more bullish than I was in Q1 of 2024. In fact, I'm a little less because a chop would tell me to treat the market as cautiously bullish or bullish chop. But I'm not going to ignore the fact that there was plenty of time for Jerome Powell. So you might say, Rog, give me a bigger picture. Why are you bullish? Well, let's get into some of the things here that are going to be relevant to us, not just today, but going forward. We were not expecting a rate cut yesterday. That's an easy one. Was that a shock? Not in the least. What would have been shocking is if we had a monetary policy shift of some sort. We didn't. Are we surprised that we're not going to get a rate cut in March? No. Again, these are well projected on the Fed Fund futures that none of these things are expected. May is a coin flip at best. In fact, it's becoming less a coin flip and more of a hold. It's actually in June that we start to see that maybe there's a cut in May, but most definitely there's going to be a quarter point cut in June. And if we go all the way out to December, we can see there's at least one, really frankly, two quarter point cuts priced in, if not a third. Is this a time that I'm going to be bearish macroeconomically? And the only macro that matters is Jerome and company. No, I'm not going to be bearish. Are there certain places that in individual stocks, individual niche industry sectors that could be? Absolutely. But when we're talking about the broader averages, absolutely not. Am I bearish? Looking at the NASDAQ here, I think got to give credit to those folks who said, look, this is a huge overreaction. I kind of kept, I was kind of keeping to see what it would be ultimately that retail traders would do. Would they panic with this? Would they buy into all the bearish talk, which has been absolutely persistent throughout January? I've seen more bearish targets to the downside, which are just bananas, But they're great clickbait, right? And I've seen a lot of that, but that's really not what's realistic in terms of the macro trend that we have, and frankly, the price trend that we have. So we trade what we see, not what we think. And if you want lots of clicks, put some crazy target out there, preferably be to the downside, because that's what those bears like. Those attention-starved little bears. You need something when you're wrong for your whole life, don't you? So that's where we are. Don't be bearish, gang. Don't be bearish. Will there be small windows of time to be? Sure. But longer term, there is a drift and it is up. So let's get to some of the questions that we've got here. I do want to touch on some of the sector rotations that we're seeing. I've been getting some questions on seasonality. Really, that should be seasonality versus macroeconomics. And frankly, gang, when it comes to seasonality, to superimpose seasonality expectations on a not commodity, right? Not grains, not meats, not softs, things that are actually planted and grown. That's where seasonals came from. Are there some tendencies in equities? Yes, there are going to be more tendencies like Q1 is good for sector rotation. Things that were lagging last year, like healthcare, oftentimes will benefit. We saw basic materials lagging. Those two are starting to benefit. So there's a little bit of bottom picking that's fueled by profit taking. That's all sector rotation is. Where can I take profit, put those profits to work in a sector that's been languishing with the expectation that it could rally? Because something from the basement going to the third floor is not unrealistic, but something in the penthouse going up into the clouds could be a whole lot tougher. That's really the mindset behind sector rotation. But the macroeconomic environment is going to far surpass any seasonality for the first quarter, right? Q1 sector rotation is really not even seasonality as much as it is human nature saying, hey, how can I build a book of trades or a book of positions that have the best probability over the next 12 months of gaining some return? All right, so let's go ahead and jump into some questions here, and I'm going to show you really quickly where I do some of this seasonal work. So for those of you that don't know, this is the CME Group Fed Watch. If you just search that, it'll bring you right to this link. The place that I like to do my sector rotation research is over here at Koyfin, KOYFIN.com. This is something we use a lot in the Sector Secrets Mastery. So if you're finding, hey, Rog, I didn't know that about Q1 sector rotation, and I don't know how to look at relative performance, come check out what we're doing. You can do that at sectorsecrets.com, but I'm going to tell you to wait. Wait a minute, Rob, don't check out your site. No, check out the webinar that we're doing next Wednesday, simplertrading.com/consistency. Take a look at what we've been doing in that mastery, not last month, not the last 3 months, not even just last year. We're going to take about an 18-month look at what we've been doing in the mastery and what type of season in trading we're in right now, which is markedly different than what we saw in Q1 of 2024. All right, when you're here at Koyfin, looking at the sectors, check these off. Discretionary staples, energy, financials, healthcare, industrials. You can skip over basic materials, although if you'd like to, check that off as well. You can skip over XLRE because if you're watching staples and utilities, it covers 2 out of the 3 defensives, communications, tech. And again, if you want to skip basic materials, you can. Now, if you uncheck staples and utilities, right? So imagine unchecking basic materials, real estate, staples, utilities. What you have is primarily the heavily weighted sectors in the Dow, NAS, and S&P. You want to add a couple more, all right? Adding regional banks, KRE, scroll, and add semiconductors. So if you keep these checked, right? You don't even need defensives if you don't want them, although it's good to see what defensives are doing when there's risk appetite or risk aversion. But if you check these off, right? So discretionary, energy, financials, healthcare, industrials, tech, communications, regional banks, semiconductors. Don't worry, you can catch us on replay. That will give you a really thorough look of what's under the hood in the 4 broader averages, NASDAQ, S&P, Dow, and Russell. And what we're looking at is where is their profit taking and where is their sort of bottom picking, if you will. The 2 strongest sectors, right, up until recently were, some of the strength was tech and semiconductors. rolling out of that. And yes, we can talk about DeepSeek and everything else, but the fact that we're seeing surges in these other sectors, that should get our attention. Healthcare, financials, basic materials, keep an eye on those three. All right, so questions. All right. And again, I know it feels like forever. Wrong. We're already in February. Yeah, gang, we're already in February. This webinar is going to be next Wednesday. And if you're finding that January is not in 2025 is not like January of 2024, by the way, at this point, 12 months ago, we were up about 100%. Not because I was taking risky trades or making big bets, but because we had a very different environment. So how do we trade this one, right? What are the tools? What are the guidelines? What is the outlook? How is it that we're going to find consistency in our trading approach, even when it seems the market's behaving so inconsistently? All right, so let's take a peek at any questions. And Eddie is asking about Dash. Sure. So when we're looking at any chart, right? And this is what we want to do in the mastery. We do this on a regular basis. I would love to do it in Charts and Coffee as well. What is the time frame, right? Time frame is dictated by time horizon. If you don't have a particular time frame and you're just interested in the symbol, and that's fair, right? Make sure you're looking at the 1 hour, the daily, and the weekly. The 1 hour is going to give you short-term swings. The daily is going to give you long-term swings, and the weekly could give you that more of a position trade. So when we look at Dash, if you're not sure what time frame, maybe in your mind, hey, you know what? I'd like to be in this for a month. That's a daily time frame. Rag, a few days. That's the 1 hour. Rag, I'm thinking about how can I position myself in Dash to put in my trading position. I always think of even investments as trades. Buy low, sell high, even over 50 years to me is a trade. So to me, that's a position portfolio, position trade portfolio. So maybe that's something you want to do. You go out to the weekly. So those are things that we want to determine. If you have a time frame you're looking at specifically, great. If not, we have to do that process of which time frame is going to be the best for a trade. And if you're waiting for a weekly pullback, you're still waiting. We just punched up to a brand new high, but maybe a little bit more near term. The 1 hour time frame for a short-term swing would be the way to go. So again, when asked what is my opinion of Dash, my opinion of Dash is, and I'm going to be long, green candles on the weekly, green candles on the daily, green candles on the 1 hour. The next question is which time frame is going to be best? Not if you do not have any vested interest in your time horizon, then the 1 hour would be the way to go. And again, this is just 101 process, right? We always lean up. There's a great, I don't have this pen here with me. How many of you have read Atomic Habits by James Clear? If you haven't, it's a good book. If you haven't read books of that genre before, it's an amazing book. If you have read books of that genre, then it's an amazing curation of a lot of thoughts that are out there, and he presents these ideas beautifully. And one of his sayings is, we don't rise to, I think it's the level of our goals, we fall to the level of our systems, right? So we all have these lofty goals like, hey, I want to grow my account. I don't know, let's take something really pedestrian, but we all want it. We want to double our account. Who doesn't want to do that, right? I want to double my account. Do you think that goal gets us to where we want to go? No, that's a great ambition. It's definitely something we all want to do, sometimes multiple times a year, right? I just keep thinking last year this time, that's exactly what we did in the span of a month because of the underlying market, which just goes back to, I didn't rise to the level of my goal. I relied, and I don't like the falling back, but it's true too. I relied on my system. And if you're finding, yeah, Rag, I've got a lot of goals. I want to grow my account. I want to double my account. I'd like maybe to trade futures. I want to get better at options trading. I don't want to be limited by pattern day trading rule. I want a simpler way of trading options. I want to really be able to step away from the screens, whatever those ambitions are. I want to be in front of the computer 1 to 2 hours a day. That's me too. Whatever those goals are, we're going to fall to the level of our system. So if you're lacking that system, you're just not going to get there. And that's really what we do in the mastery. That's really what Wednesday is going to be about, showing you my system, showing you my approach. And that's one that I can pretty confidently say will work for most people because this has been something I've been doing at this point for over 35 years. I've made the mistakes, so you don't have to go through that process of blood, sweat, and tears. And I've done all three. All right. I've actually gotten angry at a CPU. I've been there and done all those dumb things. So I think that's the responsibility of anyone who's found some success in something. You pass it along. There's a lot of joy in that. And I'm looking really forward to sharing all that with you all. And that'll be Wednesday. Okay. Now, if I'm looking at Dash, let's go up a little upstream on Dash. What is it that we're looking at on Dash? Because one of the things that a lot of traders wonder is, if I'm trading Dash, what am I really trading? And that's where, again, the not so secret of the sector secrets is we want alignment. Anytime you have a trade or a series of trades that are working, it's because they're following through, right? You bought it at A and it's at B, C, D, E, whatever. It continues to move in your favor. But the highest probability of something doing that is usually going to be a trend, which is why we love those things so much, right? Now, if I'm looking at Dash, what am I looking at? Dash is in the one that I always think about because I love the URL, or it's not the URL. I love the symbol, PB&J, which of course makes me think of peanut butter jelly time. I won't sing it. It's a hell of an earworm. So, earbug, whatever. PB&J is the food and beverage ETF, I think from Invesco. And then there's another a handful of other ETFs that this is in, but that's always the one that I think of. And then what I want to do is step back and look at what's in PB&J, right? What are the holdings? What is Dash moving with? Is it a relative outperformer? In other words, better than everything else? Is it bucking the trend where PB&J isn't doing all that well? What is Kroger doing? What is Corteva doing? Coke, Kraft, General Mills, Constellation. What are those companies doing? Sprouts, I think, is in that group too. What are those companies doing? Is Dash the best? And you know what? Yeah, let's just do it here real quick because I've only got a minute, but actually this would be a really cool thing to show you just how quickly we can do this. So let's say I wanted to do a comparison of that. Let's pull up that whole PBJ group. Dash is number one. So the first thing I'm going to ask myself is Dash a relative outperformer? Is it performing better than Kroger and Corteva, etc.? And all I do is I take this layout that is pre-built with the indicators that help me make this decision really easily, and I just compare them. And what I'm comparing is the bullish participation. What I'm comparing is the market structure. And then I'm also going to ask myself which one of these are heavily weighted in this group. And take a look at this group and what's in it. And then you want to start to compare them, right? Not find your favorite stock, right? And say, hey, let's force a trade here. But here we go. Look at it from the standpoint of, I want to trade, what's the saying? Best in breed. So there you go. In just basically a minute, I can tell you that, number one, there are a number of stocks that look fantastic in this group. CTVA, Vital, although Vital had some not so good news recently. Keep an eye on that one. CART is actually something called Maple Bear. I'm very unfamiliar with it. And then Fresh Pet. All right. Those are your relative outperformers there. Is the sector on a whole pretty strong? Not really. Dash is one of the better stocks. Not a trend, but it has the 5 candles. Boom. That's how quickly, in less than 90 seconds, we can make an assessment of whether we want to trade it and which symbols we want to trade. And that's exactly what we do in the mastery. So, all right, gang, I'm out of time. As always, thanks so much for being here for Charts and Coffee. And I will see you all tomorrow. Same time, same station.